All right. Good morning, everybody. This is Dee Dee with Power 3 Trading. Thank you for joining. I'm not here just to educate you on some strat techniques, but also teach you how to profit from the market. If you have any specific questions related to the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Rob in the Black on Twitter, and at Sepia Group. So yesterday we had a couple trades. To move that. W. So we were looking, we charted out Wayfair yesterday as our trade for the day. It was on my gapper list. There were a few other gappers we'll talk about that I didn't trade, but we'll talk about them. But this was one we charted. And, you know, I use this 18-minute chart, but 15 works just fine. Here's the key, guys, when you're looking at trading. So when we set this up, we established, I'm not sure where this line goes. We'll have to figure that out. I may have added it later. Here we go. All right, so what we did was, let's go through how we set up our charts. This lower trend line here was from way back. If you recall, we went to the daily. We had to draw this from this day's range here. Let me just remove this because it's not sure where that line. So we went from this day here, and we had to go all the way back to get that lower trend line. Yikes. Okay, way back here. Uh-oh. My charts. Okay. We went way back here to capture this line. Can't even see it. There we go. We went way back here for this low of this day to capture that line. Okay. And then we got this line. Let's see, here was it off the inside bar. And again, we had to go way back. And we had this line here off of the 18-minute. And then we had this line here off of the high, I believe, of the day. Where do we get this line? Not exactly sure. Let's see, go to the 4-hour. Not lining up. Oh, wait a minute. 18, maybe? Yeah, I'm not sure where I got this line, or if I even added it later, because that's going way back as well, but it's not lining up to anything. Nope, not lining up. I may have added it later. I'm gonna do, well, we can leave it, it doesn't matter. It didn't impact our trade here. But what we said was we were gonna go long above 68.50. I remember, this isn't lining up for some reason, but I remember saying it needs to go above this day. So, oh, you know what? I think I moved it. I think that's what happened. I was doing something. I think it got moved, but we said we're going to go long above this prior day's high. Oh, that's not here. That's yesterday. We're going to go long above prior day's high. So I think this got messed up. But anyway, that's this range here. I think that's what happened. So what we did was long above 68.50, which was, because remember, it was an inside day. So I think that's what happened here. This was an inside day. So we said it needed to go long above this high. And then we probably went way out. Long above this high, and then, or short below the low. Because remember, this was an inside day, right? And so what price did was it traded up, but it did not trade above yesterday's high. This is this bar here. Failed at this 18. So this is where we drew our 18-minute candle. This is a 2 up down to this 3 bar here. So if you can recall, I draw broadening formations from the high and the low. So this got kind of messed up because I must have moved it. But from the high of the day and the low of the day, and then where I have an outside bar intraday, right? Because what I'm looking for, and if you think about it, is when you have a big range on a stock, and most guys do not trade this, they just generally draw the megaphone, if you will, from the open and the close, or shall I say the high of the day and the low of the day. But somewhere in there is going to be a broadening formation pivot, and price will either trade back to that point and continue in a direction, or it may trade up to that point or reverse if you have a gapper. But what we saw here with Wayfair, we put this on the list because it was an inside day, but this actually is a TTO. And you know that because you have an outside bar in that opening 15 minutes or 18 minutes. I don't know what happened on the 15-minute chart. Let's see here. Yeah, actually did not go outside on the 15-minute, but it's still inside the prior day's range. But because I like 18 minutes for a reason, what I look for is a 322, right, on the 18-minute chart, or a 222 or a 212. And so what we got was a 3, right? It hit the lower broadening formation of the yesterday's low. Then it came back up. So when it hit this outside bar here, now you have a decision to make. So this is the first 18-minute candle. It hit the top of this broadening formation. So we know we're going to short if it trades below here. But then it comes back inside another TTO. And someone had tweeted me, oh my gosh, you know, all of these, you know, what we call sub-triangles. And that happens in the market. Unfortunately, not everything is going to go straight up or straight down. You know, we have what Rob calls price discovery. And so price is going to hit a point, right? And if there's orders somewhere in the vicinity, if you will, it'll trade to those points, right? But understanding the direction is important. So we know that we're not going to go long on this thing unless we get some clarity. And for me to have clarity, because this was inside day, I said, we got to wait for price to trade above 68.50, which was the high of that outside bar. But it is already now traded below 61.43, which was the low of this inside bar. So now you have to practice patience, guys. So we have this outside bar. I'm watching CCI. This comes up. So in my mind, I'm thinking maybe this is going to go 322 and trade to the upside. When that happens, there's a potential for an outside bar, right? Because remember, it's already traded down. And for this to go outside, it would have to trade back above this range for me to have some clarity around the fact that we may be looking at a 2-1-3 rev strat. And so now I'm looking at this and it's like, well, it's got to take the open. This is why I put this bar here. It's got to take the open. The open was 63.70. It traded back up. Now I'm looking at CCI again. CCI, although it looks, you know, completely down here, you can't really see it. Let me see if we can show you what that would look like if we did a replay, because it's hard to really see that in the moment, because you can see that it's trading up. Now watch it real closely because it's going to move fast. But what you want to see when you have a scenario like this, you got this 3-2 and you're like, okay, maybe this is going to go 2 up. I'm going to wait for it to take this open. So here's what that looks like on the 6-minute, right? Because it went 3, 2. So I'm looking at this and saying, okay, this was a 2 up on the 6-minute. This is a 2 down. If it trades back above this candle, right? So this is my outside bar in 18. But if it trades back above this high, which is 63.62, which is above the open. So, well, no, the open was 63.70. So if it trades back above here, yeah, 64, I'm sorry, I was looking at that wrong. 63.64, which is the high, then I'll look to go long, because now I'm looking at this as a 2 up, 2 down, 2 up continuation. But what we had was an outside bar, a 2 down, traded up. So now I'm saying, okay, if it goes above this range, I'll go long, 64, because I don't know. But I'm also looking at the CCI. All right, so let's roll it. Watch it real closely. Okay, so I don't know if you saw that, but it went kind of angled. Hopefully you saw that, caught that. I'll do it one more time, but it kind of angled and then it came down. Why? Because price traded up and created another outside bar and came back down. So let's replay this again. Yeah. So what? Now you have another outside bar. This was a tricky trade. If you traded this was a tricky trade. So because it created another outside bar here, which I did not like. But I said if price stays below this range. So again, this broad information becomes my stop loss. So I waited for that to close because now it's trading back below -100. And then I said, I'll take it off the next candle. And if it stays below it, then I will, or if it trades back above it, and I'm again watching my CCI, it went inside, came down, went inside again, but it got pretty close to that higher, to this broad information. I think it tapped it, stayed inside, and continued to trade down. Did not trade all the way down to our lower trend line here. So this is where, again, you want to be careful. It went inside. It's still 2 down on the 90. I didn't like this move here, so I just got out. It came back down. I did not try to take that entry again. And then you can see on the 90 flip after 12:30, it traded back up. I did not take that trade, but that would have been a nice reversal here off this 90 flip. Why? You have a 3, 2 down, 2 back up. That would have been a nice reversal trade. I missed it. I wasn't in the market here. Okay, so I wanted to share that with you. If you can practice patience on these trades, I think Steve Burns had sent out a tweet, and I retweeted it this morning about trading. And I should have emphasized successful trading, because you can trade all day long and get chopped up and lose money. But successful trading is not about, it's about patience and not about aggression. You know, my few contracts are not going to move a market, right? And so that's what you have to think about. You want to be in the flow of the market, and the CCI kind of helps me with that. All right, so that is Wayfair. Let's look at Upstart real quick. This was another gapper. And you can see how this traded. I did not trade Upstart at all. Huge gap down. This was just a mess. But you can see in the first 18 minutes, it gapped down, came up, and then right back inside this range that we had drawn. And remember, we went way back, and I think we just kind of drew some horizontal lines for the dailies, and you can see it just failed. So you could have shorted this right here in this 18-minute as it came back down. CCI is still well below 300, negative 300 on the 18. And so, you have time for this trade to continue until it crosses back over, right? And you can see that here. We're still good. It crossed over on the shorter time frame. Could have exited and got right back in. You see that little doji, because here was your open, or waited, right, till it crossed back below, went back red on the day, and entered right here off of that 2-2 continuation. Okay, but I did not trade this. And again, you see these small body candles forming on 18 or 15 if it's a small body candle, or a doji, or this would be like a doji, but a hammer or shooter on a 15 or 18 in my case. But if you see that on a 15-minute, that's a good reversal signal. Here you had this shooter, if you will, that's a Momo shooter. Continuation, that's what you're seeing here, right? Continuation to the downside. You can trade those if you understand your broadening formation. All right, still good on the 90 or the 60. This was the 11 o'clock flip. And this is why I like the 90, because you may be thinking, hey, this is going to continue. But this was, well, I guess in this case, it actually worked out okay. But here's your 90 flip right here, right, at 11. And so if you're looking at that on a 60 or 30, you may get caught in in this and get triangled out. This was your 11 o'clock flip. I mean, your 90-minute flip. And so if you're looking at this, be careful. Again, you have when price starts forming these dojis, small body candles on the longer time frames, though, those are great reversal signals. So don't think this is going to continue when you get these small bodies like this. Your price is consolidating, short small body candles. Don't look for that to continue. Those are reversal signals. Okay. All right, what else we got, guys? Let's look at the cues. Market. Oof. So I was all over Tesla yesterday, which is why I wasn't, and I did miss this move, and that's what you saw on Wayfair. All right, so the market reversed here, and so cues. Let me get back to my view. So if you are patient, this is what I mean by patience. So the market traded up, gapped up, came down. I didn't have my signal here. So this was a 2 up, right? This is actually a 2 down. Although this closed down, this is a 2 up candle, right? So it's up from the prior day. So it's a 2 up, 2 down, 2 down, 2 down, reversal. Now, you could take this trade. You could take this trade, a little higher risk. I hold off on these, especially when I'm trading Tesla. Why? Because it moves quite fast. One candle could be a 10-point move, right? And an option, that could be your day. If you're on a small account, that could be your day. So you have to be careful when you're jumping into these trades. And so someone had tweeted out and said, hey, I took a risky trade, because I think he was looking at the SPY. It's one of my followers. And he was asking my opinion. And I was like, wow, it looked like it hit it to a T. But I had shorted, wait for the, if I had shorted. So it hit there to a T, and it came down, came back up. Now, again, if you're in SPY and you take this short here and you don't get out when it comes back up, that's a risky trade. And the reason I say risky is because here, price is still skirting positive 100. So when I'm looking at this, I'm like, well, the momentum is still to the upside. Here, momentum still looks to be to the upside. I don't know if I want to take this short here. Let's look at the next candle. Oh goodness, it traded up. So I'm not sure if I want to go long either, but I'm gonna wait for the next candle, right? Because here's what happened. You have a gapper inside day, traded up, 2 up, traded down, 2 down, but closed up. These are tricky, guys. They'll get you every time. Then it went 2 up and came back down. This was a mess. So what does that look like on, let's see if we can get this on. Let's see what that looks like on a 60. Oh, that actually looks pretty nice on a 60. It looks like, you know, kind of like a shooter, right? Close below the open. Rob will say 60 is like a new day. So this is at the 1030 flip. On the 18, that's 1024, right? Could you have caught that early? Yeah. And this is what I did with Tesla. So doesn't that look very similar? Although this came down a lot further. I did not trade this, guys. I did not trade this. I actually got in here. So it actually wasn't, I waited. I did wait. I waited to the 60 flip on this because I did not like this move. And I was like, And then this traded and I was like, that's 1024. I didn't like the move. It's still above 0. And I said, well, you're close to the 60 flip on here. I'm looking at my 90 because I don't necessarily have the 60 on. I'm looking at my 90 and I said, yeah, I know I want to trade this, but I think I'm going to wait till after the 60 flip. And I'm glad I did because this happened. Right at the bottom of the hour, you got a 2-up candle. So if you're looking at this, and this is what's important, this formed what looked to be a hanging man pattern. You can see that on the 60. This formed what looked to be a hanging man. This is still inside day, guys. And so if you're taking this, you may be thinking this is going to reverse because it went green initially. So if I put this on the, let's just move this to the 5-minute chart. This is the 5-minute chart. So folks will ask me, do I take my reversal off the broadening formation or off the flip? And my answer is no, I don't. You have to see what's happening here. This is a red hanging man pattern, if you will. Here's your open, right, at 8/19/31. So for price to go red on the day, it needs to take all of this out. And I'm looking at CCI, right? Of course, I'm not on the hourly, but I'm looking at my CCI. And when this flipped on at 1024, this is trending down. So I know I'm short here, but I just decided to wait because I was so close because this traded down. Had this stopped way up here, let's say this was 1024, here, maybe I would have taken this move here, but no, this was 1024 here. This had already taken out this range. That's why I waited, guys, because now I'm looking to take out this range. Hope that makes sense, because remember, we're still inside this 18-minute candle. This is the low of that 18-minute candle. So at this flip, at the 1024 flip, I had already, price action had already taken out this range. Now I'm looking at to take this range out. I said, you know what, just wait to the 60 flip, bottom of the hour, because what my experience has said, this will likely triangle out at some point. And it did right at the 60 flip. I'm in right here, boom. Triangled it out again, came down at this flip, created this doji. At this point, so someone had asked me, I think yesterday, about a trailing stop. I actually did have a stop in here And I kid you not, I'm ticked. It did not trigger. This crap did not trigger. So it came up and I'm still in the money, but not as much. So I'm mad. So I used patience. I said, wait for it because it may come back down. You're still inside this 18-minute bar. And so it did. And I just hit a market order to get out. I was mad. I was like, why didn't that trigger? Because I had it to trigger when price came back above this range and it did not. It came all the way up here. I was like, oh my God, what happened? I'm still in this position. It didn't trigger. So anyway, software. Okay, so that's my Tesla trade, guys. I hope that helped. So this was that move on the Qs. I did not, like I said, I wasn't in the market, so I missed that move. So it happened on Wayfair and probably a whole host of other stocks. So don't know what the noise was, but you get this, right? And you have to be prepared. That's why, it hits my target. I take my money and I'm good. I don't try anymore. I used to be that girl that was trading all day long and gotten greedy trying to make more money. I don't do that anymore. It's just not worth it. You get stuck in these ranges, especially if you've had a move like this, a 2 hour, because remember, this is a 2-hour flip. I think I mentioned that yesterday. You have to think about that. This is your 2-hour flip. So you had this move all day. Sometimes that happens and you can get, all day pukers. But when you look at this, even here, you're going to get a pause, right? Market's going to start to consolidate. You get this little doji here, and then you get the continuation at the 4-hour flip, which is why I like to have my 4-hour up, because I'm looking for those continuation patterns, right? Is there going to be another move to the downside or a reversal, right? Could have reversed here. And so just keep that in mind. When you get that move, that first, which is why I'm usually out of the market in the first 90 minutes, you got that 2-hour flip at 11:30. I don't want to get stuck in that range. Okay. All right. What else I got? I think that's about it. Let me see what I have on my list for today. That was yesterday. So some gappers I'm looking at. Dash is gapping. So Dash went, looks like it's going to do a 1-2-2 rev strat. All right. Don't know how far that can go given, we're still middle of the month here. Today is the last day of my 3-day candle. So we may see some moves to the upside, potential reversals starting here for the balance of the week. Here is DocuSign again, and I kind of like this. I don't know if that's going to go through next week, but I like the idea of a potential reversal starting here in this market. I'll look at the cues here in a minute. NVDA is inside bar, so we're going to chart this one. And I'd really love to swing that, but this market is just way too finicky. Coin reported yesterday, they're getting slaughtered. Glad I got out of that swing a while back. It's at, all-time lows. So we'd wait for the 18-minute flipped, or even maybe the 60-minute flip to see if there's an opportunity here. And then, of course, I always trade Tesla. So looking to trade Tesla above yesterday's high. All right, so let's look at the cues. Oh, hold on, let me look at the cues here. Yeah, so cues inside day. All right, so we already have this drawn out from our broad information. So this is exactly what we'd be looking for, is target here at around 310, maybe 309 and some change. So the high here was 309.35. So I would be looking at a 310 target on Qs. And if we can get that, but this is still way below negative 100 on my 3-day. I'd like to see that crossover, like this move here. with some momentum crossing over -100 on that 3-day, but I don't see it happening today. But could it in the next week? Certainly possible. What's today? Wednesday. We're in the middle of the week. All right. So looking to go long today. We'll see. I'll look at SPY because I know a lot of folks trade the SPY. Same deal. Traded down yesterday. You got this 2 down. Yeah. I'd be looking to go long today. CCI is trending up, even though it traded down yesterday. So I'd be looking to go long. All right, so let's trade. So let's look at NVDA. This will be our trade for the day, and then I'll wrap up. All right, so I don't have any outside bars on NVIDIA for the 90 from yesterday. We do have one for a couple days back. And we do have one on the 3-hour. I'm sorry, in the 18-minute, we have an outside bar. So we'll just start here with the, let's start here with the, we'll do it off the 4-hour. Let me blow it up. All right, so I don't have an outside bar here, but price is coming back into this range. So I'm gonna do this instead of going way out on NVIDIA. Here's what I'm gonna do. If price trades, because remember, this is an inside day. So if price trades above this range here, this is inside, so above 181.98. I'm sorry, I can see that. Yeah, 181.98, then I'll look to go long, right? If price stays below this range, I'll look to go short below here, this inside bar. Let me see if we can get, we may have to go out on that. I'll have to go out on that. So we'll do the 18-minute on this one. And then long here, what's this low? 170.25. 171, and a 3-bar, 171.93. 170.96. Okay, boom. All right, so that's gonna be my range, right? And here's why. We're gonna short below here. We got another lower low here because this was an inside bar. What was that low? 168.27. We have a 3-bar here. 68. 169. All right. So if it trades lower, then we'll have to track that down from what month are we in. We are in, so we got this outside bar here. So we'll just do this since we have an outside bar here. 165. All right, so that will be my lower range if price trades below yesterday's low. And above here, we're gonna go here. So I drew this inside bar down to this inside bar here. And the reason for that is because price has got to trade back inside this range. If it trades above yesterday's high, you're inside this day, right? So let's just set the 6th. So May 6th. So if price trades above yesterday's high, guys, you're inside this outside bar. So what I'm doing is I'm looking at this and saying, okay, well, if it's going to trade up, it's got to take out this inside bar here. We'll look at it on a shorter time frame. So I drew this broadening formation from the low of this bar back to, I'm going to draw it to this next lowest bar, next lowest low here. Because this could be a potential broadening formation pivot, because this is going to be the low bar in this range. Okay? So this could be a potential pivot. So we want to be aware of that. This is something, if I look at it on a daily, I'm not even sure how most other traders would draw this, but they may do it something like that. But understand that this is another range on a shorter time frame. And so you want to be careful, and I've seen this happen a lot, where it will go 2 down, inside, 2 up, hit this range and come right back down. So that's why I draw on these intraday time frames. Okay, so let's go back. All right, I'm going to remove this. Okay, so now we got this inside bar here to contend with. So I'm going to, again, draw a broadening formation here. Let's see if we can get another level below this range or inside this range. This would be inside the range, but a little low. Let me see if I got anything else. All right, there's nothing else inside this range that I like. But I got this 3 bar here that I need to contend with. I got this outside bar here. So if you watch any of my other videos, you know, I like to draw to and from outside bars. So I'm going to use this outside bar instead of this bar here. This is high as 189.81. This low is 189.78. So here's what I'm saying, guys. If price trades above this range, you're now inside this outside bar. You're still inside this outside bar. You're inside this outside bar. Think about it in terms of choppiness. When you're inside outside bars, choppiness. So this could be a difficult move to the upside because it's got to get through all of the choppiness, because this will look choppy on a longer time frame. And so that's how I look at my charts when I'm drawing them. The reason I look for those outside bars is because if you think about this in practical terms, 3, 2, 2, you're looking to trade outside of those inside bars. So when you're drawing these broadening formations, you're drawing using those outside bars for a reason. And so I'm looking at this, I'm like, okay, now it's going to be inside these ranges. Because I could do this. I could very well do that, because that, actually, I think I do want to do that. This is the next lowest outside bar. I think I'm going to leave it like this. Right, so this is the low broadening formation for this outside bar. Right, so what I'm looking at is a 3, 1, 2 to the downside. So let me look at this on a shorter time frame, because this is going to be complicated. All right, let me just draw this again. Where do I have my next lowest bar? Because this is an outside bar that's too high. That's lower. Okay. All right. So, and then of course, if you get here. All right. So let's look at this on a shorter time frame, guys, because this will get a little tricky. All I did was draw broadening formations off these outside bars on the 4-hour. The reason for that is because this is congested, right? If you looked at this on, let's say, a weekly, that's an outside bar. And that's what you're trying to contend with. If I looked at this on my 3-day pattern, this is what we're contending with. And so that's all I did, is I took this, instead of on the daily, is I drew these on the 4-hour time frame. because you're trying to go back up inside an outside bar. And if you're a weekly trader, you can see that you're trying to you're seeing if price action will trade back up inside this week. And so this is why this is important. These are just broad information pivots. It may happen or it may not. So we drew them all on the 4-hour chart, 4-hour time frame. If price trades above yesterday's high, so that's this range here, know that this is going to be your first target. So this is going to be tricky. I will not be in this market until after I get my signal. Now, because this is a reversal on the daily, so it's inside. So let's look at this again. I'm taking my time with this because not every inside bar works. This is a reversal on the daily, right? This is not, so a continuation would be a 2 down, 1, 2 down. That's a continuation pattern. This is a reversal pattern. 2 down, 1, 2 up, right? So you got this to contend with. So what I'm looking for is if price action, I'm looking at my CCI on my 6 and my 18. If I can see price action and 90, if there's big volume and this 90 crosses above, like it did here, if 90 crosses above 100, let me see what that, then I'm looking to get into this market on a TTO. So here it traded up. Forget about the lines, guys, because we just drew those. So it traded up, came down, and came right back up on this. I'm looking to get in on any TTOs. All right. So just keep that in mind. It may come up, hit a level, right, and reverse. So just be careful. So if I get momentum on my side, right, CCI drives the price action up. I'm looking to go long above yesterday's high, but I may just wait. Why? 2 down, inside bar. I may wait. If it crosses back above this high, which our line here, hold on. What was that, 184? Then I may look to go long above here because they're so close together. This is 180, 180, 28, 180, 125, 184. So be careful. If it hits here, TTOs, then I'm looking to go long. Okay, so it may happen before my 18-minute flip, but CCI is going to help me with that. If I see this baby trending up above 100 on the 6 and the 18, but I still need for price action to come in and continue to trade up. Sometimes I look at those on a 3-minute. So just be careful with that trade, okay? If you are not comfortable, or if you are trading on a small account and you want to reduce your risk, just wait, because you're going to get a triangle, right? This was yesterday on NVDA. It traded down, it traded up, created this outside bar. I didn't trade this, but when I look at this, and you can see here was my short list from yesterday. I actually didn't trade much at all. I was stuck in looking at Tesla, but after I looked at it, I was like, man, look at all these moves. But if you, and so my point is, if you just set up your charts like I do and just be patient, you can see those triangles a lot clearer on a longer time frame than you can on a shorter time frame. All right. So just think about that. You know, Tesla was my biggest winner yesterday. We had Wayfair that we charted, and then, you know, this was my list. And so yeah, just be careful, guys. I'm going to wrap it up. Practice patience. You know, Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. There is absolutely no reason to jump into the market. There isn't. I think we get anxiety. I think that FOMO is real. But if you can focus in on what you're seeing on a slightly longer, and like I said, it does not have to be the 18. Let me just look at the 15 and how that would have played out. Okay, I'm not gonna, I'm not gonna lie. You see how 15, hold on guys, I want to show you this and then I'm gonna shut up. Let me see if I can do this on, real quick. Yeah, okay. No, yeah, I gotta do it this way. So this is why I moved to the 15. I'm not kidding you. Um, oh, I did that. I didn't have to change that. What was I thinking? It's the interval that I'm looking to change. Here's why I moved to the 18. I wanted you to see how different this looks because I've just gotten so accustomed to, here's the 15, here's what this looks like on the, okay, so here's the day. Here's why this looks so different to me. When I'm looking at this 15-minute chart, you have to know if you're going to take this 2-2, where this broad information is, and to get out quicker, because this will kill you. And so I saw this on a shorter time frame, especially if you're in options and you hold this is going to take you out. I saw this on a shorter time frame and I was like, oh wow, let me just show you. I was like, oh wow, I missed that move. If you're not on using multiple time frame analysis, and you understand these broad informations, guys, this is going to absolutely hurt you. So when this came down, if let's say you're waiting for the 15-minute flip and you take this here because you think this is trading down, you take this here and it immediately creates an inside bar in this 5-minute, man, you have to exit this trade. This is now green, right? So this 5-minute candle, it turns green right in here. You're losing money if you traded this. But when I trade this 18 minute and I see this and I'm patient enough, I'm not taking this move here because this is at, well, it's on a 980, 948, but it immediately comes back up. Let me see if I can do this on a 3-minute chart versus the 5. It immediately comes back up. The threes just look so different. So here is at 948. Here was at 945. This looks good. And you're like, oh yeah, I'm making money. This not so much. It just, you have these, when you have these small body candles like this, these are reversal signals. This looks like it's gonna go. And then the next 5 minutes, right, it flips up. And so that's why I started using the threes, so multiples of threes, hence the name, part of the name, is because I was getting in on these moves and immediately getting triangled out. Now I'm waiting and I'm like, yeah, I don't like that move, because you can see it faster. And I start seeing these dojis like this, I'm out. I don't even hesitate because now I've trained my eyes to see what I call morning star and evening star patterns. You've got a 2 up, an outside bar, 2 down, an outside bar, 2 down, a 2 down. Ooh, exhaustion on a shorter time frame. And so if you don't know how to play these on these shorter time frames, you really, really should wait. You could take this on the short time, that reversal, but again, knowing where to exit. Otherwise, just wait, be patient on these gappers, okay? All right, so I'm gonna wrap it up there, but I did just kind of want to show you that you could take these 2 twos, but you can't wait till it gets back up here, right? You wait till it gets back up here, you're losing money. You have to know where these reversals are coming from on these shorter time frames, right? This is a reversal on the 5-minute. This be a TTO continuation on the 15-minute, right? This actually reversed on the 15. TTO'd TTO'd, still inside, came back down. So 2 down, 2 down. I mean, sorry, 2 up, 2 down, 2 up. I don't like those trades. I do not like those trades. So the market has no direction at this point. So waiting for the bottom of the hour was the right move on yesterday. So, all right, just think about what you're doing. Be patient. All right, I'm gonna wrap it up and